The Calgary market is outperforming all other major cities in Canada right now, being driven by three major factors: oil, well over $100 a barrel, the burgeoning IT tech sector, and incredible affordability nationally. I expect this to continue in the coming months. Let's take a look at what's actually going on in the city. Just like in any other market, the prices for Calgary homes are dependent on supply and demand, and the tight market for detached and semis saw new listings decrease considerably. The sales to new listings ratio now sits about 73%, and months of supply is around 1.5%, which indicates a very hot market overall. Listings for townhomes and for condos were up over 17% year over year, but these units are being quickly absorbed by the market and the insatiable demand from buyers. Months of supply is at 1.5 for towns and 2.25 for condos. A balanced market is 4 to 6 months of supply. Supply for all housing types in Calgary continues to be remarkably low, just 1.69 months of supply on average. This is keeping the Calgary market deeply in a seller's market, even today. So now let's take a look at the demand side. Sales were down for detached and semis from 2021 levels. However, that was a historic year, and they do remain elevated over historical averages. Now, condos and towns outperformed, with sales rising 33 and 66% respectively. Detached homes do make up the majority of the residential market, and the prices had risen 17% year over year, but the other housing types still performed well. Semis were up 15%, towns up 17%, condos up 9%. But what does this mean for the overall market? Well, many people have tried to beat interest rate increases and rush to buy homes. Many still have rate holds that will be expiring soon, so I expect sales activity to continue to remain highly elevated over historical averages for the next couple months. Detached homes still remain the most popular housing type in Calgary. Everyone loves a private yard and that white picket fence. That's the dream. However, the data shows that the sharp price gains of detached homes and the very limited availability have pushed buyers into more affordable townhomes and condos. I've seen this trend play out many times in Toronto and the GTA, and whenever that price gap between low-rise and condos rises, it always has to eventually narrow. And I don't think detached or semi prices are going to come down, so that means town and condo prices have to go up. Next, there are three major factors that I think will continue to push demand for the Calgary market. So number one is the high price of oil. I remember when oil hit negative $40 a barrel at the beginning of COVID because there was no storage space anywhere in the world. Gas hit 60 cents a liter at my local gas station. But now fast forward 2 years and it's over $2.10, mainly being caused by the war in Ukraine, but also high demand, especially because of summer driving. I don't know if you know this, but Alberta has the fourth largest oil reserves behind Venezuela, Saudi Arabia, and Iran, and the province is greatly benefiting from oil currently sitting at about $118 a barrel. In fact, Alberta was forecasting a deficit of $18 billion, but now they're expecting a $500 million surplus. They already have no provincial sales tax, no land transfer tax, no foreign buyer tax. Imagine what they can do with $500 million that's going to benefit the province and the people of Alberta. Calgary actually sees the majority of this benefit because it houses the headquarters for many of those energy companies, and they tend to hire more people when oil prices are high. So much so that there are actually shortages for skilled labor right now in the province and city. And historically, there's always been a positive correlation between Calgary home prices and oil prices, which simply cannot be ignored. In May, 69% of the country's total job growth was seen in Alberta, and it's expected to lead job growth in 2022 and 2023. The second factor that's going to benefit demand is the IT sector of Calgary. Even though Calgary is benefiting hugely from oil and gas, it's no longer dependent on it. Since the last oil crash in 2014, that's when all the layoffs happened, and Calgary has been heavily diversifying into many other industries, and it's quickly becoming the Silicon Valley of Western Canada. every week, more companies are either moving their headquarters to Calgary or they're setting up operations there. A few recent announcements in the news. Emphasis, they set up a delivery center in Calgary. They're going to be hiring 1,000 people there. You have Alberta. They're actually investing $23 million towards the University of Calgary's Quantum Science Tech Hub. They're calling it Quantum City. And in May, there were over 15 companies that were hiring for over 400 positions in Calgary throughout June. So good employment opportunities always attract people, which always creates additional housing demand and tends to increase prices. The third factor is affordability. As interest rates rise, affordability is eroded for many buyers as the mortgage amount they qualify for is dependent on their income. And that tends to shrink as interest rates rise and wages stagnate. Unaffordable housing nationally is driving many end users into Calgary where the average person can still buy a detached house. I speak to people across Canada all the time, and especially those in the GTA who are considering moving to Calgary because you have remote work possibilities that are now available. You have amazing job opportunities if you wanted to work in the local economy, and there's amazing low cost of living in the city, second lowest cost in North America. This national affordability is creating additional housing demand, and especially you're seeing it in the resale market. And I'm personally investing in Calgary because I believe in the long-term appreciation potential of the city. And I'm working with many investors from across Canada who also see that potential. Where else can you still buy a property for under $500 a square foot, including parking, that's going to cash flow from day one, even at today's interest rates after 2 rate increases? The investment fundamentals of new builds are unmatched compared to any other major Canadian city. And this is attracting huge attention and creating huge demand for pre-construction properties. I have semi-detached properties available from $539,900 up to $650,000 that include legal basement units. I've got townhomes from the high 400s, condos from the mid 300s, and several other projects that are going to be launching in the downtown soon as well. If you're interested in investing in the Calgary market, please reach out today because I have fantastic options available. If you enjoyed this video, please like and subscribe. It really benefits me, and please let me know where you're investing.